Hi everyone, my name is Jonathan Chester and I am a founder of Bitwage. So everyone always talks about Bitcoin moving to the mainstream, but what does that actually mean for Bitcoin to go mainstream, that is? Does it mean that everyone is walking around with some Bitcoin in their wallet? Or does it mean that Bitcoin has become the rails for payments around the world? Let's talk about some numbers. There are 6 billion people in the world that do not have access to modern financial tools. We all know these people as the unbanked and the underbanked. Without access to modern financial tools, these people have no efficient means to safely store their money or to engage in international commerce. So, for the underbanked, there's a very compelling reason to start using Bitcoin. If every one of the 6 billion underbanked held only $50 worth of Bitcoins, at 21 million Bitcoins, each Bitcoin is worth $14,000. But let's look at this from another perspective. On average, the cost of sending money overseas is 8% from various fees and unfavorable exchange rates. For many, the process of receiving and sending these funds requires waiting in line for several hours in all these inconvenient distributed locations. So with Bitcoin, all these costs and time and money, they go away. Last year, we saw $426 billion of individual remittances. And note that this number does not include payments made by companies to other companies, employees, or contractors. So if Bitcoin were to have a $426 billion market cap, at 21 million Bitcoins, each Bitcoin is worth over 20,000 US dollars. For many, this is what it means for Bitcoin to go mainstream. People are using Bitcoin on a global scale to engage in a globalized economy more efficiently. So the question is, how do we get there? There are 3 attributes that Bitcoin must meet in order to become prevalently used on a macroeconomic scale. These 3 attributes are 1, usability, 2, accessibility, and 3, relative stability. So by usability, what I'm talking about is that it must be easy to use Bitcoin to satisfy daily needs. That means being able to go down to the grocery store to buy goods, paying for rent and government fees, and splitting the check with friends at the local bar. And as far as usability goes, payment processors within the Bitcoin space are doing a good job onboarding more and more merchants for accepting Bitcoin. But there's still a long way to go. Point of sale can often be a long, slow, and awkward process. When I try and use my own Bitcoins at the point of sale, I have to go, I take my phone out, I open my app, the cashier opens their app, and it takes all this time. On top of that, there are all these problems that come up because of the differences in exchange rates between different wallets and payment processors. While we're all trying to figure this out, there's a huge line behind us just wanting to pay for their food. So it's clumsy, it's awkward, it could be a little bit better. As the methods of point of sale become increasingly streamlined, especially with the advent of Bitcoin debit cards fairly soon, and the types of merchants accepting Bitcoin expand so that I can pay for my rent and pay for my taxes in Bitcoin, Bitcoin will become more usable. Accessibility. So by accessibility, I'm talking about the fact that the method of obtaining Bitcoins must become natural. When I am talking about Bitcoin with my friends and I get them all hyped and excited and they say, how do I buy my first Bitcoin? I tell them, these are the different exchanges, these are the different wallets, go and figure it out. And what ends up happening is they don't end up finishing. And that's because of all the friction of onboarding, right? It takes a long time. I mean, it's this long and cumbersome verification that you got to go through, requires you to have to go to your bank aside from the website. And then after that, it takes several days for your Bitcoin to come. Many people will just fall off and lose interest during that time period, or even just forget about it. These methods of attaining Bitcoin, they're not natural. When you think I'm gonna go and buy my groceries, I'm gonna go and get some drinks at the bar, you don't think I'm gonna walk down the street change some of my money into another currency and then go to the bar. You're just going to go, right? So it's unnatural the way that we get it now. The more natural way to do it, the way that we typically receive different currencies, is by either receiving it as part of a wage or part of a payment for goods and services. So as methods of receiving Bitcoins become more natural, such as through wages and payments, Bitcoin will become more accessible. So finally, I'd like to talk about relative stability, right? So by relative stability, I mean that the use of Bitcoin is relatively stable compared to what it's replacing. In the case of Bitcoin as a currency in the United States, Bitcoin is quite volatile in comparison to the US dollar. The volatility comes from the fact that there's still quite a large disparity between the number of speculators and the number of users holding and transacting in Bitcoin. Since Bitcoin fails the relative stability attribute in the United States, Bitcoin is much more likely to act as a currency in countries with sharp volatility to the dollar. This includes countries like Argentina, Zimbabwe, Venezuela, and perhaps even Greece soon. It is in these countries that Bitcoin will actually be used as a store of value and then soon afterwards a means of exchange, increasing the number of users transacting in Bitcoin in comparison to speculating. So as the ratio continues to tip in favor of users transacting, the entire ecosystem will become more stable, enabling many of the mainstream in these countries with more stable currencies to notice Bitcoin for its efficiencies rather than its volatility. And we're already starting to see this with users receiving international payments through our service, Bitwage. In particular, let me tell you the story of Pedro. Pedro is an Argentinian contractor working for American clients. Unfortunately for him, recent regulations by the Argentinian government substantially reduced the value of his wages. So over the past 30 years, the value of the Argentinian peso has gone to almost zero twice, and having just recently defaulted last year. So as a result of all of the defaults and the loss of value and the inflation, many Argentinians have lost faith in the value of their currency. And this would have typically caused a capital flight out of the country, however, or at least out of the currency. The government reacted, imposing certain capital controls on the flow of money into and out of the country. Because of these controls, there's now a disparity between the exchange rate provided by the banks and the actual rates that people use on the streets. So how does this affect Pedro? Well, when he receives his wages through wire transfer or another traditional method, he typically loses 35% of his paycheck, and that is before the taxes he has to pay. So with Bitcoin, Pedro can actually legally receive his payments while avoiding this 35% cut to his paycheck. And through solutions like our payroll for the individual, he does this without his clients or employers having to sign up or really learn about Bitcoin. We are seeing more and more contractors from around the world leveraging Bitcoin not only as a store of value, but also to reduce the time and costs associated with receiving international payments. So this brings me back to my original question. What does it mean for Bitcoin to become mainstream? It will take many years for Bitcoin as a currency to reach a critical mass in countries with stable currencies. So instead, Bitcoin right now has the ability to create a seamless payment network for an ever-increasing global economy. Bitcoin will become the Automated Clearinghouse, or ACH, or the Single Euro Payments Area, or SEPA, of international payments, acting as the payment protocol behind the scenes, enabling fast, low-cost global monetary settlements. In the United States, if you ask someone how money is sent from one bank account to another, the answer that you'll typically get is along the lines of, I get your account and routing number, I provide this to my bank, and the bank sends money to your bank over the course of several days. And that's it. They have no idea that there's this complex financial system working behind the scenes called the ACH. So Bitcoin will act like the ACH in this matter on a national scale, meaning that the Bitcoin will be used for international payments. However, people may or may not know that they're actually using it. The only difference, it will be far more efficient. So at the end of the day, when people are receiving their international payments with Bitcoin as the system laying down the foundation, they'll notice that they're receiving their international payments faster, at a lower cost, more efficiently. They might not notice Bitcoin, but they'll notice this. So where exactly does this efficiency come from? Here's how I like to explain it to someone who barely understands Bitcoin. And it all comes down to the differences between a public and a private ledger. To drive the point home, I'm going to use an extreme example. Let's say a bank in Brazil is sending 10,000 US dollars worth of value to a bank in South Africa. How does the bank in South Africa know? How does it trust the Brazilian bank is actually sending 10,000 US dollars worth of value? How is it trusting or knowing that this value is actually being removed from the Brazilian bank's private ledger? And how does the South African bank even know that the Brazilian bank has money to begin with? Well, over a few hundred years ago, the bank would have had to put a bunch of gold and silver on a ship and sail it over. Thank God we are not still in the financial dark ages. So now, what will happen is the banks will come up with a set of rules and regulations for which they then have to hire employees to maintain and update on a continual basis, creating all these unnecessary costs. However, with a public ledger, these costs go away because now the bank in South Africa can just reference the public ledger and know, okay, the Brazilian bank did have that money and I actually did receive those payments. So with the blockchain and the inherent aspect of a public ledger within the blockchain, we are now able to have a seamless process for international payments. There are two examples of companies that we work with that are leveraging the blockchain to more efficiently pay their international employees and contractors that I'd like to discuss. The first company, whose CEO wishes not to be named, is a Philippine developer outsourcing company. The CEO works out of New York City, while the rest of the company works out of the Philippines. In the Philippines, the banking infrastructure is pretty limited, with only about 27% banking penetration. So while the CEO is receiving payments to his bank account from US clients, his employees don't have bank accounts to receive their wages. Instead, the CEO wires money to his mother, who has a bank account, and she then withdraws the cash and hands it out in person to the employees. This is a huge hassle that the company has to deal with, on top of the costs involved in transferring and converting the money between currencies. With systems like our international payroll system, the company now has an easy way to get money into the hands of their employees in an efficient manner. And by leveraging the blockchain, not only do they save in time and money, but their employees can actually receive the payments without a bank account. And they can even do that in their local currency. The second company I'd like to talk about is run by a guy named Edmilson. He runs a tech startup with employees in Brazil. He has an agreement with his bank that says that he can send to free international wire transfers a month to his employees. However, the result is that he actually loses 8% on the exchange rate, and it ends up taking days for his employees to receive their wages. What's worse is that the wages that he sends to his employees are denominated in Brazilian real, meaning that the company takes on the cost of the 8%. By leveraging the Bitcoin protocol through our system, Edmilson actually gained between 2 and 12%, depending on whether the price of Bitcoin was rising or falling. And his employees were able to receive wages in their local currency within 24 hours. These are just a couple examples of how Bitcoin as a payment protocol can bring Bitcoin into the mainstream. By leveraging the blockchain as a payment protocol, the system becomes relatively stable compared to other methods and other payment protocols, as the volatility exposure during these methods are anywhere between 10 minutes and parts of a second. depending on the relationships between exchanges and the service providers. So, with the attribute of relative stability taken care of, all that really needs to be developed for Bitcoin as a payment protocol to go mainstream are the accessibility and usability traits of the system. So, over the course of the next few years, more and more systems like Bitwage will come about, answering these needs of companies and individuals looking to engage in a global economy. Thank you.